Hello, everybody. Thank you for attending. My name is Russell Katz. I am an account manager at the Capital Network, and I appreciate you coming to today's Netlinkz webinar. Shortly, I will be turning it over to the CEO and Managing Director, James, and there will be where he will present and discuss the presentation that was previously released, and we will also then have time for a Q&A session afterwards. Please feel free to put Q&A either in the chat or in the question and answer section below. We did have a few questions that came through beforehand, and we will get to those first, but then we will get to questions asked during the webinar. With that said, I'm going to turn it over to James. Thank you, James.
Thanks, Russell. Thank you to everyone who has joined. I guess everyone's seen the presentation because we released it last week. So I'll try and keep it at high level so then we can get to the questions at the end. So I'll start now. So that's the disclaimer for everyone. Standard process. I won't dwell on that. So at a glance, our current market cap is it ranges between 28 and 35 million. Our estimated revenue, based on the preliminary numbers that we've seen to 30 June, is 21 million, which is significantly higher than the previous financial year, which was at 15.5. In terms of our business model, it remains the same in delivering software solutions, network solutions, based on subscription. In terms of the organization, we've got 150 plus employees and contractors based in various parts of the world, and we're expanding that out now that we've are a reseller of the Starlink broadband satellite-based service. In terms of markets, we have more than 100 customers now all around the globe consuming our subscription services, and we're expanding that. In terms of locations, we're in Malaysia, India, Greece, Qatar, Thailand, Hong Kong, Bahrain, the US, UAE, New Zealand, and the Philippines. And that footprint will continue to expand as we enter into more partnerships and appoint agents to help us with the distribution of Starlink around the world. In terms of the product, we talk about network as a service. So we're delivering the VSN, which is the software-based solution for networking, and it's aimed at enterprise, and that forms part of the overall strategy in our distribution agreement or global reseller agreement with Starlink. We're aiming at enterprise-based solutions. The actual technology itself, which started off as the VIN, which is now morphed and through evolution into the VSN, has won several awards. It's patented technology. It's won things like the US Government Security Challenge, Telstra Innovation Challenge awards, and various others. So quite a piece of technology that has won several accolades. In terms of the management, I myself am the CEO and Managing Director. Steve Gibbs is the non-executive chairman. And then we have various divisional heads. So Gavin runs the South Cloud business. Samuel Pye runs the lawful interception business, which has significant contracts with various telcos around the world. Geordie Martin joined us recently as the Chief Operating Officer, as Anthea got promoted to running the Greater China business as the CEO there. Larry Sackwib, our Managing Director for MENA and Asia, squarely focused on Southeast Asia and at Pakistan at this point in time, with a focus on Starlink and the NAS. Peter Gray is our Chief Financial Officer, and Stuart Dazzler, again, another recent addition to the team, who is heading up the satellites division, which he's responsible for the rollout of Starlink from a logistics and sales perspective. In terms of organisational structure, there's nothing really new here other than the divisional focus. In terms of, we're setting up individual businesses, which will make the reporting lines simpler, make the business more transparent from a financial operating perspective as well. Each of the businesses has its own economic and financial objectives. They then come back up to myself, then that goes on to the board. The divisions themselves have the various employees under them, with, as the previous slide, they each have a managing director or CEO. The Netlinkz Technologies Hong Kong, that's where, that's the business that the China business folds into, which is two-pronged. There's the software and network engineering solutions, and then there's the network solutions, which is what we describe as the NAS. In a bit more detail, so the network as a service business, that's predominantly the VSN, as you all know it. Effectively, we're delivering the VSN via a network as a service. We deliver it in such a fashion so then companies pay a monthly subscription as opposed to making significant investment in hardware. So it's an easier consumption model for corporates and enterprise, and really the underlying technology, which the company's core, one of the company's core assets, drives the whole network as a service solution. You know, again, we've talked about this over the last few years, but the applications of network as a solution applies to any sized enterprise, and the network has several objectives in mind. It's a communication platform. It allows IoT or enables IoT. It enables AI. So from that perspective, our focus is to provide that platform which creates the performance and security required by applications such as IoT, AI. It's really anything to do with a network that a company operates, uses it as an operating platform. The satellite divisions, which was effectively us entering into a global resale agreement with Starlink. Effectively, we're providing a high-speed satellite internet service. I don't need to go into any detail. That's very well advertised by Starlink itself, other than to say that you know, it is opening up the market for us and providing us a sales channel, of which we're then bundling the NAS as part of that solution. And that's where the company's growth really lies in the short to medium term. And more importantly, it establishes a very robust subscription-based revenue model for the company. The SSI telecom surveillance business, which we acquired in late 2020, that is purely focused on lawful interception. It is a reseller of some unique software and IP. Its customer base includes companies such as Vodafone, TPG, also Spark New Zealand. That business has been going now for about 14 years. Since the company or Netlinkz bought it, the return on that business has been significant. It operates off you know, a 45% net margin. So from that perspective, it's a solid business as the slide suggests. Average contract term is 3 years, and that revenue base is continually growing. The South Cloud acquisition, which we made last year, it's a regional-based ISP. Our focus there, and really it led us into the whole Starlink relationship. It became very obvious to us in terms of the lack of internet access in rural and regional Australia. The focus there obviously is to resell the Starlink solution or hardware, along with our NAS offerings, plus other services, including, as we say in the slide, voice, digital voice, Wi-Fi and wireless network solutions. Again, another sales channel for the NAS. The China network engineering solutions needs no introduction. We actually launched that business, ironically, at the start of COVID. That business has demonstrated robust growth. The business is starting to approach cash flow break even. So from that perspective, it continues to do what it does. The customer lineup there is significant. We do work for China Telecom, JD.com. There's several companies out of the US that use our service, and also Europe. So a very strong business and continuing to grow. In terms of the revenue of the company, the performance to date, obviously our revenue has grown well. The challenge for the company as we move forward is to get to a cash flow break even and to start reporting EBIT, in positive EBIT, that is. So from that perspective, we're going through a cost initiative at the moment, but we've also got to balance that up with continuing to have resources to grow the business moving forward. In terms of revenue breakdown, China continues to be a dominant part of our revenue, but now with the launch of NAS, particularly with our partnership with HGC, as well as the Starlink global reseller agreement, you will start to see in future that the China component be diluted or diversified, and our revenue base to increase outside of China significantly over the course of the next few years. In terms of strategic overview, one of the key aspects of what we're doing is to partner up with world-class organizations. What Starlink has done for the company in particular is it has opened up several doors for us. And we've made, I think, a number of announcements over the last few months. The key thing is we're partnering with the likes of PT&T, Spark New Zealand, and organizations of that magnitude. It also opened up the door for us to have the discussions with HGC. And so part of our objective now is to actually establish a group of global partners which allow us to push ahead with the NAS. Starlink for us is a significant sales channel. Of course, it's important from a gross revenue and profit perspective, but more importantly, it has put Netlinkz on the map. And from that perspective, the combination of our product, our software, and the Starlink hardware are a fantastic combination for us to start really building that subscription-based revenue in new markets and Australia. It's not just global, it's also Australia, where in Australia, for example, we've partnered with Telstar, which is one of Telstra's largest MSPs. So from that perspective, they have already started making sales, which has been a very good development for the company. But really, the underpinning of our relationship with all these people in the sales channel is the NAS technology. And what makes the NAS technology, or the VSN, very, very, how can I put it, relevant to today, are the things that we kind of discuss on the right-hand side of the screen. The cyber risks, again, our product has never been penetrated or hacked in all of its operations. And so from that perspective, we continue to be a cyber-grade network. The fact that you can deploy our technology in the cloud, which allows a company to transition a network to the cloud and not have legacy systems, that's a very important factor for most companies that are looking at cloud consumption and shifting their business to the cloud, is what do they do with their network and how do they transition that? From that perspective, as the statistics suggest there, it's a very, very big market. the VSN delivered through NAS is a very, very big opportunity for the company. The satellite internet, as I said before, has opened up several opportunities for us, has put us on the map globally as a company, and is now a very good platform for our NAS product, if you like. And then you've got the regulatory changes which are working in our favor in terms of privacy, how data should be managed. There's a concept which is becoming more and more popular called data sovereignty. So a lot of the companies are now asking companies to keep the local data, that a global company keep its local data local. And they're pushing regulatory changes throughout the world to protect consumer data for the local market that it's sourced in. Over the last 10 years, 15 years, companies like Google have exploited this gap, and they've sold people's data globally to companies. What governments are trying to do now is to push for changes to protect that. The second bit is, obviously, with cyber risk, there's more and more regulation, and there's more onus on boards and management teams to have policy in place for cyber protection. And so from that perspective, you will find that a lot of that will drive companies to be much more conscious about their cyber security. So again, the level of our NAS, or the VSN technology underpinning the NAS, is key here. As I've just mentioned, in terms of cybersecurity, the threats keep increasing. Unfortunately, part of this whole cyber threat lies back to the original design of a network. And most networks today are still band-aided together. So you have legacy networks, which apply to old data sets, old world computing power, and then the shift to the more, if you like, the software-based, cloud-based networks. Between all that, you have a lot of switches, routers, and then firewalls and various levels of security that get added to the network. That is a big problem for all organizations. It's very costly in terms of maintaining that network, but more importantly, it actually opens up to cyber threat because the hackers are able to penetrate the networks via VPN, or there are weaknesses in the network that can be exploited because of this patchwork that exists around the world. From that perspective, that spend's not going to stop. As most organizations are finding, transitioning to the cloud does not solve your network problems. You actually have to design a network based around the fact that you've shifted to the cloud. It's not as simple as saying, I've gone to the cloud, therefore my network will just come with me. So that has created challenges for companies as well. The other issue for the companies around this whole cyber threat is IoT. You're adding a lot more devices, mobility. There are a number of other factors that now are coming into play as networks become much more flexible and much more mobile. So the global cybersecurity spending, or CapEx, will not slow down as organizations become more and more mobile, and that's just a fact. So in terms of our value proposition and what we do, our core proprietary technology, which has been around for some time now, offers proper zero-touch provisioning and connection. Again, that's all built into our network offer. It's not something that we add to a core solution, if you like. So because our NAS is pure software based, a lot of the integration is very, very easy. The fact that we have built zero trust into the software rather than have it as an add-on, I think highlights the fact that we've got some leading security based technology that's imprinted in our offer. It's not as if we're integrating other people's technology to make the network secure. It is all our proprietary solution, and it's all coded as one single product. And that's probably, I think, the big key differentiator and part of the value proposition. In terms of the integration of our software into a cloud solution, because it's software, again, we don't have any proprietary hardware, or we're not carrying any legacy. It's very, very simple to incorporate our software solution in any of the cloud providers. As a matter of fact, all customers can use us to build a network that uses multiple cloud solutions. So we're not selling or reselling a single cloud solution as part of what we offer. We give the customer the flexibility in using any cloud or all cloud or a mixture of cloud. And that's a very important component. The other bit that really matters for everyone in the space today is the fact that they need the flexibility of mobility. Again, going back to the VIN days, one of its key features was the fact that you could operate as part of the network from your mobile phone. It was a point-to-point connection, secured. And so from that perspective, the network itself allows multiple users to do that. So it transforms into a peer-to-peer network, which again, is part of the reason why it has the performance that it does. Obviously, we use a number of, how can I put it, proprietary coding to make the performance of the network as fast as it is, or a lack of latency. And that's why we're very popular, particularly in providing video and camera solutions from an IoT perspective, because of the lack of latency. With the Starlink offer, we're able now to take that to maritime. Mobility becomes part of a vehicle's movement or a truck. So from that perspective, we've added another layer of flexibility for an organization looking to become totally mobile in terms of workforce and location. So from that perspective, I think that we provide effectively the platform that allows you to connect all the various moving parts, which we call the NAS, and you can do that in the cloud. And I think that's one of the big core strengths of what we have to offer. And I think we will continue to push, I guess, the strengths of that capability globally. One of the key developments for us in the last 6 months, off the back of the Starlink announcement, has been our partnership with HGC. So HGC is, or what HGC stands for, is Hutchison Global Communications. It's a very large telco based in Hong Kong, but with operations all around the world. HGC started testing what we call the VSN 6 months ago, and pretty much it's led to us now entering into a partnership with HGC to deliver a NAS solution to HGC's enterprise customers all around the world. The key thing here is we're providing the software solution, which plugs into all of HGC's infrastructure. And HGC will work with us. They'll provide the distribution, they'll provide the sales force, and also the customer support. Netlinkz will provide the VSN, the technology to form the NAS, and will provide the training required for their sales force. But effectively, it's a partnership of us being the software provider, with HGC providing all the infrastructure and customer support, as well as the distribution. What's interesting about the deal, if you like, is that HGC have done or tried to do NAS before, and they've tested several technologies from several large companies, including Juniper, what have you. They have chosen the VSN technology to launch this new version of the NAS. So from that perspective, it's a big accolade for the technology and the team that have worked on this tirelessly over the last 6 months. The key selling points will be the device-to-device or point-to-point security, as I said before, and that's very, very important in mobility. As I've said, it's a total software solution, and what it does is it gives the flexibility of all HTC customers to use any cloud anywhere in the world. So they don't have to go with the one cloud provider. And these things are very important for companies because they have different types of objectives in different markets in the way they consume cloud. And again, the important thing here is the flexibility in being able to use whichever of the cloud providers a company wishes to use, because it's a performance issue sometimes, it can be a price issue, it can be a security issue, but we provide the flexibility in the company being able to make the decision as to which cloud provider they wish to use. In terms of the low latency, that's one of the key attributes of our product, coupled with core infrastructure and satellite technology. We do not affect the performance of Starlink or any of the HGC infrastructure. So typically what happens is someone may use the HGC network or the core infrastructure, then they start to integrate various types of components for the network. That integration then has significant impact on performance and security. With our total software solution, that integration is unnecessary because we provide all that. As I've said in the previous slides, zero trust, things of that nature all come as part of our NAS solution. So latency gets affected by the integration that is required in putting a network together. One of the unique things that we do is provide that all as a software solution to reduce the amount of integration and friction, which is what affects performance and causes latency. As I've said before, we've partnered with Spark in New Zealand, PT&T in the Philippines, ALT in Thailand, and Telstar in Australia. So they're really our key telco partnerships, if you like, thus far. We have pipeline of at least another 6 telcos that we're talking to around the world, which will obviously expand our footprint and the ability to generate sales. The one thing that's not there, which I guess is subtle, but HGC do have a significant exposure through Europe, or offer us significant exposure in Europe, South America, and all of Southeast Asia. So we have got what I would describe as quite a diverse group of partners already that offer us access to most markets in the world. The Starlink global reseller agreement, what does that mean for the company? As I've said, it actually allows the company to build a direct channel to market. And really, if you distill what Starlink offers an enterprise, it provides the enterprise with internet access. That's the key thing. The question then is, well, what else does an enterprise require? And the simple answer is it requires a network, and we deliver that network. In terms of a forecast, we're kind of saying here that we see at least 4,000 satellites being deployed, which will provide more and more internet access to all remote areas globally. And for us, that's a significant market opening up. It's key that we obviously appoint the right agents as part of our reseller agreement, and that's a key aspect of the focus of the company today. In terms of the performance, I think everyone can go online and they'll see the actual accolades that the actual Starlink broadband service gets from everyone in terms of speed. I think in Australia, if you move outside of the metropolitan cities, everyone waxes lyrically about the performance of Starlink. So from that perspective, it's a game changer for businesses and individuals. Obviously, we're concentrating on enterprise, but you know, the demand from mining companies, from contract workers, businesses based in remote and regional areas around the world we're seeing very, very strong demand. The way the services are deployed, which I think I'll spend just a couple of minutes on. So once the satellites are put in orbit, then SpaceX and Starlink have to negotiate what are called landing rights in order for each country to open up. Right now, there's access to 72 countries where, when I say we, Starlink are negotiating the landing rights for all those markets. They will open up over the course of the next 18 months. And more countries will get added to it. Obviously, there are other security and political reasons why some countries will be slower in being opened up. Obviously, China has not agreed to landing rights or to be part of the Starlink, how can I put it, community. So from that perspective, the landing rights is an important aspect of what gets negotiated by Starlink. And as those landing rights are finalised and countries accept then the landing rights, that's when we go in and start to negotiate the appointment of agents to help us establish a local footprint. In terms of the other thing for the slide, as I've said, it gives us a channel to market, which is very, very important. But more importantly, it allows us to establish a relationship with the client to help them deploy a network which is of extreme quality when it comes to cybersecurity and performance, and is simple to deploy. So from that perspective, that's what Starlink has done for the company. I can't wax lyrically about the fact that it is a direct channel to market for us, and it has put the Netlinkz brand and the VSN NAS technology on the map. Again, on this particular slide, we estimate revenues of about $16,000 per customer or per enterprise. And we see probably profit of about $3,000 per enterprise over the course of 12 months. The revenues can be sort of cut up into two. There's the upfront revenue, which is us selling the hardware, which is the Starlink hardware, and also us selling the installation and services that go with it. Typically, we'll get partners to assist with the installation because we don't want to carry the cost of the staff doing that. But to date, we've used partnerships like that to actually finalise the sale, if you like, in the installation. The other more important or longer-term based revenue is subscription revenue, which can be broken up into effectively two. One is the Starlink subscription, so the broadband monthly subscription, which we get a cut of, and then there's the NAS revenue that we generate ourselves, which is our revenue 100%. From that perspective, we expect that revenue to, how can I put it, grow exponentially as we add more and more customers to the subscription. But really, they're the two components of the revenue. In terms of the margin that we're generating at this point in time, it's obviously higher than 20%, but we expect to gain higher margin as obviously we improve the implementation and the delivery of the service. In terms of the momentum and the profit build for the business, we're estimating in this example here that we'll sell 5,000 units over the course of a year. And basically, I think we're demonstrating here, obviously you've got the hardware sale, which is a big upfront component, and then you've got the ongoing services. The ongoing services is where the margin is for the business. Revenue, obviously it's a one-off, but really the focus of the team is to build that subscription revenue and to build that profit margin in the subscription revenue. You can see here from a 1 year to a 5 year basis, the difference that we're able to generate in the revenue. Obviously, as I said before, you've got exponential growth that comes with that, but really the success in the business will be in that margin on the subscription revenue. And so that's really the focus of the team. In terms of current sales, we've moved more than 200 units, and we really started our selling in the June quarter. We had a few sales in the March quarter, but it's taken us time to build process, work out logistics. There are a number of components to this which we had to put in place before we could actually start our sales program. But from our perspective, we expect now revenue to start to increase significantly over the next few years, if you like. So in terms of an investment summary per the slide, effectively three key things. Obviously our NAS, which is very important. It's our core asset. The company's invested heavily in NAS and the VSM technology that sits behind it. From that perspective, we believe that we have one of the best NAS solutions in the world today. And partnering up with Starlink allows us to really penetrate the market. As we push further into the satellite-based, if you like, internet service, plus our combined partnership with HGC, we'll have what the industry calls product bundles that enterprise will consume. We're very confident about that. We expect our product to have a significant head start because of our zero trust focus, and also the way that we actually manage performance and security. So from that perspective, I think our combination of NAS plus the Starlink kit, if you like, combined with our technology, I think that it makes for a very strong revenue case. On the other hand as well, we've got SSI Telecom, which again, as a business, as I alluded to before, it sits at about 40 to 50% net margin, and that business is growing significantly. We bought that business for just under, I think it was $10 million off the top of my head. It's almost paid itself back. So it pays a significant dividend to Netlinkz. And so from that perspective, I think that business will continue to grow. With Starlink, SSI has an opportunity to sell its lawful interception to the various markets that Starlink opens up. So there is an additional play with Starlink, and Samuel and his team are focused on developing those relationships to generate further revenue. South Cloud as an ISP will continue to do what it does, but it will bundle Starlink. It will also offer NBN in cases, but more importantly, either one of those involves the NAS as part of the bundle. In terms of China business, as I said earlier on in the presentation, it is approaching cash flow break even, and that business will continue to grow. It's got well over 100 customers, and some of them are the leading names in their respective industries around the world. I think that's the end of the presentation. Thank you for listening to me.
Thank you, James. I'm going to jump back in here, and we're actually going to switch over to the question and answer section of the webinar. We already have received quite a few questions, and just a reminder to please use the Q&A section. If you don't want your name to be said, just use the anonymous answer. Otherwise, I'll be sure to credit the question to you. To start with, we're going to jump into the questions we received ahead of time. And the first one is about the cybersecurity. Specifically, they're asking for more information on the feedback you are getting from enterprises and whether they are seeking you out specifically for the cybersecurity needs or whether it's more of a byproduct.
As I said earlier, cybersecurity now is a serious issue for every company, but more importantly, it's the regulatory changes that are driving company demand for cyber solutions. There's a misnomer that you can cyber-proof everything, and one of the challenges companies have is you can't stop someone opening up an email and then opening up the attachment, and then a hacker's in the network, so to speak. And this is where popularity is gaining in layered solutions in networking, so you can protect certain types of data in a network, and it's not exposed to everyone's email, so to speak. But the demand really is coming out of a requirement to meet regulation and to overcome serious cyber threats. It's not ad hoc. Probably 4 or 5 years ago, it was ad hoc. Now companies want what I would call a cyber solution policy, which incorporates a network solution as part of it. They don't want the sort of, oh, let's do this, now let's add that, and let's add this, because I think all of that doesn't work. So the Medibank, the Optus, all of those penetrations have highlighted that once you're penetrated, there's an issue. And so I think most boards and all management teams, or I should say all boards, are now being very proactive in seeking cyber solutions from the ground up, rather than oh, let's just buy some product, let's just buy some additional product to make us more secure.
Thank you. On to the next question. It's related to the geographical breakdown of revenue sources. So it says 72% of Netlinkz revenue came from the China network engineering. How is the company working towards diversifying its revenue sources?
So as per the presentation, the focus really is on Starlink as the first, and equally as important, the second is HGC. So they're the two drivers that we're now using to diversify our revenue. The China business is still a very important component of what Netlinkz does. Obviously, it's the way that we went to market. For historical reasons, we chose China because at the time they saw the potential in the product back in 2017, where we teamed up with China Telecom and then partnered up with iSoftstone. We're applying those principles now to our relationship with Starlink and with HGC. So we're not doing anything unusual from a business process perspective. We're repeating what we did in China now elsewhere in the world. And so from that perspective, I think both of those initiatives will now start to generate revenue to start to diversify the 72% that's delivered by China, or the China business.
Thank you. Moving on to questions regarding Starlink. Chris Martin sent in a question asking, does the recent announcement of Telstra's partnership with Starlink potentially affect Netlinkz's position with that company? And do any of those users that Telstra sign up get an option to use Netlinkz security?
I think the Telstra announcement is a good one because it highlights the need for Starlink. Does it affect Netlinkz per se? My response would be no. I think it's a positive for Netlinkz. And why do I say that? Our partnership with Telstar, we deal with Telstra customers. So from that perspective, Telstar have chosen us despite what's happened with Telstra. And I've not been critical of that. Telstra are entitled to do what they're doing with Starlink. But more importantly, what it demonstrates is that an MSP the size of Telstar, which is significant in the Telstra universe, has partnered up with us to take Starlink, but more importantly, the NAS to those customers. I think as we increase our profile and people appreciate what NAS does, I think you'll find that a lot of the consumers of Starlink in the enterprise space will want to use the NAS. So I think yes, we're happy to sign a deal with Telstra, allowing Telstra to resell our NAS solution. And I think HGC, the fact that they've partnered with us, and once we go to market, again, it will open up that the telecoms market, the big telcos to us.
Excellent. On the note of NAS, just going to jump real quick to we do have still have some questions that were submitted beforehand, but do have one question that just asked, could you please explain what the company means by network as a service? So you mentioning NAS quite a lot. Could you just provide a really brief explanation there?
So typically, we have what's called the VSN, which is all software, and it can sit in the cloud, for example. So most companies want to consume a network service. Typically, they'll consume servers, what have you, or they'll go to cloud, which is a whole bunch of servers anyway. NAS is a platform that you deliver that network solution. So we deliver our VSN technology via the network as a service. The network as a service then is a subscription-based model. So you're consuming whatever it is that you wish to consume of the NAS, and you choose to pay that as a subscription. So NAS is really a delivery platform. It's become very popular, or becoming more popular, because most companies are shifting to cloud, because it's a much more efficient way of being able to run your network and to grow your network, because you can hyperscale. What NAS allows us to do is to go into that environment to hyperscale with a company using cloud or consuming cloud.
Excellent. Jim sent in kind of a two-part question. He wanted to know how many Starlink units were purchased by Netlinkz and paid for it in FY23, and directly related to that, he had a question about the operating expenses for FY23, which ran at approximately 14 million over the previous year. He was just hoping for some clarity around the increase in operating expenses, since it only had an incremental increase in sales.
So I'll start with the second question first. The operating expenses went up because what was included in the operating expenses was the consumption, our purchase of Starlink hardware. So that's why there was the so-called blowout, if you like, in terms of our operating expenses. So the company needs to improve the way that it's disclosing its financial information. And Peter Gray, I think, who's on this call, if you like, he's working on that to explain that. We consumed approximately $7 million in hardware from Starlink in order to meet the demand on the other end that we're selling to enterprises. So part of that blowout was as a result of that acquisition, if you like. So really, if you think about it, the Netlinkz balance sheet now has assets on it, which are hardware, which is the kit that we buy from Starlink to sell to enterprise. So in this reporting period now, we're obviously going to publish our full year results. The company will go to, I'll say, extreme lengths to explain that. But that's why we had that anomaly, if you like, in the accounts. That was it, Jim? You said Jim's highlighting. Yeah.
So it's an investment in the Starlink.
Correct.
The Starlink acquisition.
Yeah, and we generate margin off that, and other things that come with it, right? So. From that perspective, that was unfortunately, with the way that the 4C is done, it just got all lumped in, and it shouldn't have been. So that needs to be corrected, and Peter is working on that.
Excellent. Moving on to the questions that we're getting live, which we're getting quite a bit of interest there. What portion of Starlink customers do you expect will take up a NAS subscription?
good question. We're budgeting on at least 50% of enterprise.
And I apologize, that was actually Matthew Reed who asked that
All
question.
right, yeah. So to Matthew's question, we're budgeting 50%, and obviously increasing over time.
And directly related to that, is the NAS solution mostly sold in a bundle? So is there a bundle with Starlink that's going on, or is it just mainly communications companies?
No, it's a bundle. So it's a bundle with Starlink, and it's a bundle with HGC. So either one, we're still bundling.
Okay, so we John Sampson wanted to clarify as well, and I think you just hit that point using HGC as an example. Someone can download the Netlinkz app at an additional cost, so it's bundled into that.
It's bundled. It's
Yeah.
bundled. Yeah.
So,
There's nothing stopping someone buying NAS on its own, but in these questions, when you mention HGC or Starlink, it's bundled. If they don't buy it today, they can buy it later, but our preference is it's bundled.
So just to kind of we have a few questions that are similar, so I'm actually going to combine them. Tom and Bill really wanted to know how Netlinkz is working to grab the market's attention more and kind of to have the market understand the positive sentiment that is really in the growth of this company right now.
Well, one is we've engaged with TCN. Two is we're increasing, obviously, our collateral that we're putting out into the marketplace via TCN. And we will now start to have a lot more, I'll say collateral, which is a terrible way of saying information. We'll have a lot more information and more Q&A, if you like, around what we're doing with Starlink and the NAS and what we're doing with HGC. But the company to date, I think, has not been proactive in pushing its story too far out. And we're developing that now with TCN. And also we're looking to appoint a marketing agency to really help us with the strategic positioning of the product with our partner, with our key partner being Starlink and our other key partner being HGC.
Yes, thank you. So we are working with the company quite closely, and look forward to really addressing those concerns in the future. And Matthew Reed wanted to know, have you been working with government policymakers? Do you expect they will mandate this level of network security? And as the saying goes, the best way to sell a product is to make the government mandate it.
I guess the closest thing we'll get to a mandate is certification. And so we're now working with a company called Dipole in order to have our product and services and the entire company certified, which is the closest thing you'll get to the mandate. And so, for example, our company in China is ISO certified. So they meet all the various cyber requirements, security, etc. And that's why obviously they get so much work and customers. So from that perspective, we're going through that process right now with Dipole. And once we have that certification, I think the company will be in that next layer above in terms of being able to get, how can I put it, sizable contracts with government and corporates. But you need that certification. That's the closest thing you'll get to a mandate.
Excellent. Yeah, and there's obviously high watermarks to those, which creates a bit of a moat around the business
Sure.
as well. Going back to the Starlink contract, we did have a question that was asking what is the duration of the contract and are there performance requirements?
It's an open-ended contract, so there's no duration. We have, there's various performance requirements that we have under the contract. Simple things, obviously, landing rights have to be negotiated. In some cases, we have to have market presence, depending on what the country requires. So it's very specific around things of that nature. but we do have some performance requirements under the contract.
And then just the second last question that we have, given from Graham Douglas, given you've purchased all this Starlink hardware, how rapidly do you think you'll be able to sell through? I believe you mentioned the 5,000 units previously in the presentation. If you could just maybe extrapolate a little bit on that.
Sure. So currently, if you do the numbers, but I'll talk approximate as opposed to precise. So we've got roughly, let's call it just over 2,700 units today. We're saying as a minimum, we're going to do 5 million over the course of the next, 5,000 over the course of the next 12 months. So we still have to, consume or buy more Starlink hardware. So we're going to move it. We're moving it quickly. Is the answer. So.
Yes. So there's really no concern about units becoming obsolete at a rapid rate because you're just going through them at such a significant pace.
Yeah.
Excellent. So no real warehousing concerns in terms of
logistically. We have to take delivery. I'll bore everyone for 5 seconds. Logistically, we have to take delivery of the physical units. But what we've done with Starlink is we now have a logistics agreement where we pretty much take it out of the Houston based manufacturing plant and it goes directly to some of the customers. So one of those examples was Spark New Zealand. So it landed directly in Auckland. So as I said before, we're improving those efficiencies in the way that we're managing that. But typically, if you've got 200 or 300 unit order, you want to get that from Starlink in Houston to the customer. But again, where the complexity comes is in how you land them in the foreign market, because they all have their own intricacies, if you like.
All right, and then we did just get a quick clarifying question. How many units are you able to disclose? How many units you bought from Starlink this year?
In the current year, as I said, I don't have the exact number, but it's approximately 2,500 thereabouts.
Yeah, excellent. And then the last question that we have is approximately how many enterprise customers does Hutchinson's have worldwide? From Colin.
I've been making the number up, but it's several thousands. I did see in one of the Hutch presentations, it was approximately 10,000, but that's a very broad number. So that's not saying, whether it's a one-man band enterprise versus, 100 versus 10,000, but it's several thousand customers all around the world.
Yeah. So we can be, confident in a high several thousand, but there's no way to know the breakdown of that at this time.
No.
Excellent. Well, I want to thank everybody for taking the time to join us. I think that you'll agree that this is a very exciting time for the company, and we will work towards making investors aware of that going forward. And thank you, James, for your time today. And with that, I'm going to end the webinar.
Thank you very much.
Thank you.